Me now?
Yes, I can see you. I can hear you. Okay.
You can hear me?
Wow.
Great. Well, the gang's all here. Hey, Hill, the gang is all here.
Yep.
Great. So anyway, so we got a fabulous show today. So thank you everybody for popping in. And today we're going to be talking about loan applications. And that is the Popo in the back. And they're hunting us down for information. So we're going to be talking today about how to get ready for an application and what is required of you to fill out an application so that you can make an offer on a property and your contract will be the one chosen. But before we get started, he always starts us out with what the statistics are and information for this week.
Yeah. Okay. I wasn't able to look at how many days on the market things are sitting. Maybe it's still around 1 to 2 weeks, but here we go with King County. In the past 2 weeks, we had a rebroadcast of a show last week. So I took a look at what happened from our last live show to today. So that was 2 weeks ago. We've had 763 homes listed with 1,272 pending.
Mm-hmm.
How does that work? Here, oops. Okay. And then the average price of those homes were $1,540,000, $1.5 million.
That's crazy. Mm-hmm.
Can't believe it. Last year was $995. That's a difference of 55%.
Mm-hmm.
Wow.
Yes.
That's King County. Okay, Pierce County, 421 homes active, 688 pending, $556,000 the average price, and last year was $525 at the same time. That's a 6% difference.
Mm-hmm.
And then Snohomish County, 351 homes, 563 pending, $760,000 for the average price. This year, last year, $678,000. That's 12% right there. And again, homes are staying a little bit longer on the market before they get pending. But as you can see, there's a ton of pending homes. People are buying left and right. Okay, yeah. Who knows?
Yes.
And it's back to school. We've got a couple weeks before the kids are going back to school. The families are kind of done looking for homes. But you know what? They are still, there's still some schools that are hybrid. I don't know if everyone's going into the schools 100% of the time, but we've got time to get new homes before the holidays. Now it's a big push is before the holidays. You want to get into a brand new place. So there you have it. Market update for the last 2 weeks.
Let's go ahead and write off what V has just told us. So last year, the average prices of a home were in the $900,000 in your area. Now it's at $1.2 million. So what does that tell us? It tells us that competition actually is very high. And in order to compete, they've kind of the loose leaves have been shaken out of the tree. If you are kind of looky-looing and you're not really sure, then don't even waste your time and don't even get into the market. Right now, applications are for people who are serious about moving, no longer looky-loo, or maybe I'll buy, maybe I won't. It's not that type of a market. It's kind of like Black Friday, right? You go there, 6 o'clock in the morning. If you're there to buy. Basically, it's not about, I'm going to see if I can get a computer for $50. No, it's like, if you put your hand on it and you don't buy it, it's gone. It's the same thing right now. So what we're going to talk about today, we're going to talk about how you can get your application to a point where it's going to be the most competitive out in the market. We're going to kind of interact and we're going to role play and we're going to talk about what you would have to go through to actually get a loan. Now, for me, I'm a mortgage loan officer. This is what I do. So I'm going to be playing me. And V, who is currently
the buyer.
Yes. So V is the buyer. So we're going to go through the process really quickly for you to kind of show you what it looks like, so you don't get so scared when you go into your own loan application. Okay. So V, how do you want to start this? You want me just to pretend I'm on the phone with you?
Yeah, ring. I'm calling you.
Hello, this is Tina Lombard, the most fabulous mortgage loan officer ever.
Well,
how can I help you today?
That's what I heard. I'm working with the best broker around, Violeta Strash with John L. Scott, and she gave me your name as her preferred mortgage lender. And I know I thought I'd start there first and then talk about or just let you know what I'm looking for, and then I'm going to go shop around. I want to do that, and I want to shop around because I want to get the best rates.
Oh my goodness!
I don't know if you have the best rates.
Of course you do. Okay, all right. So is it just yourself? Is it you or another person? Who are all the people buying? Who are the people buying?
Me. I'm buying, and you know what? I saw this we want to buy this $800,000 home. It's just a fabulous home, and I guess I need to get pre-approved and get a letter from you of some sort, but I need to know what I need to do at this point. We really want to buy that house.
Okay, who's we?
My husband and I.
Okay, so you two on the loan. Very good. Okay, the first thing I do is we have to get all your information. We have to pull your credit. We have to look at your assets and look at your job and some of your history. Somewhat invasive, but then again, we're asking for $500,000. So we're going to ask you one or two things. But once we get that information, we'll be able to tell you how much income, due to how much income you have and debt and savings, how much money you can actually qualify for a loan. And then we'll put that together with how much money you'd like to put down, and we'll come up with a purchase price. And of course, we're going to qualify you for something that we know you can get approved for and give you that figure. Once you go up, if I tell you $1.5 million, then you'll have at least a target on what you can put an offer on and not go over. So if you're approved for $2 million, why would you go out there and look at $4 million homes? So we want to give you an idea of what you qualify for and tell you what the payments are to see if that's your comfort zone.
Yeah, but I just apply for a $800,000 loan.
Okay, great, awesome. Okay, well, what we're going to do?
House. Okay, and so tell me what I need. So for you to tell me how much I should be looking for right now, maybe that's out of our price range. I don't know.
Okay. So let me find out a little bit more about you. Did you? We have to fill out an application, and we're going to look at your credit. Do you know much about your credit? Is your credit good, fair, or excellent?
I'm sure it's really good.
Okay, very good. All right. Now we're going to look at your assets too. I need to find out how much assets you have. So could you give me bank statements or tell me how much you have in assets?
These are hypothetical numbers, right? But let's say, like, my husband probably makes $100,000 a year, and I work too, so I make $50,000 a year.
Okay, and you've got about $80,000 you said to put down.
Well, how much do you think we need to put down?
Okay, here we go.
800,000. Yeah, tell me.
Okay, so let's do this. So what we have to do whenever a loan officer just tells you, I can give you this rate, this price, and whatever, they're just shooting from the hip. We really cannot give you a cough medicine or a flu medicine unless we know what makes you sick. So we cannot, really give you any type of information unless we know where your money's at. We don't know what your credit is. Some people say their credit is good and their credit turns out to be a 518. Some people say, it's not so good and it's an 801. So we really need to find out what your credit is. We really need to find out how much money you do have in your account that is liquid, and find out how much you're paying for rent right now and how much you're paying for mortgage right now. So when you say something like $150,000 is your income, I divide that by 12. I come up with like $13,000 or something like that. I divide by 50%. Now it's at $6,000. Blah, 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 blah. Boom. You're approved for $700,000. Well, you could probably buy around $750,000. Okay.
But
that would be no, okay, but you can't hold me to something like that. Okay. You can't hold me to something like that. So that's something that we can just do the math. but I don't know what your credit score is. I don't know how much money you want to put down. If I take all your money for savings, if you want to put $300,000 down, but you only have, $5,000 left in your savings account, that may not be a good source to go. So we have to look at your whole credit profile. So have you ever went to the bank or ever went to the doctor and you say, oh, I got a stomach ache, I got a pain. And they're like, give me some medicine. The doctor says, let's do a CAT scan. Let's do MRI. Let's do some tests. Let's check your blood. Let's do your temperature. They do all that. Loan officer has to do that too.
Okay.
You can't just go in and say, I feel sick. I don't want to feel sick anymore. Give me some cough medicine. Okay. So whenever you ask for a loan officer for a loan, they want to get a whole, what's it called? They want to get the whole platform. So in this case, I'd be like, okay, fill out an application. I'm going to give you a link. Fill it out to the best of your abilities. Put down your assets. Put down your debts. Put down where you work, where you lived, your social security number, date of birth, all that fun stuff. And I will, on this side, pull your credit. I will look at your assets. I will come back together with a formula, and I'll tell you exactly, like astrology in your chart, I will tell you exactly what you qualify for, how much you would have to put down, and what your interest rate would be, what your payment would be.
Okay.
And once I do that, I'll say, boom, you're qualified for, let's say, to purchase a home at $2.9 million, and your down payment is going to be, $500,000. So I'll be able to tell you all that. Your payment's going to be $6,000 a month. So I'll be able to give you that and say, and the rate's going to be 2.99. I'd be able to do that. But I cannot legally, to keep my license, give you an interest rate without pulling your credit. It is illegal.
Okay.
Okay.
The buyer has questions, but I'll ask them after the break.
Okay. Mm-hmm.
Tune in to Real Estate and Money every Tuesday afternoon from 2:30 to 3 here on Rainier Avenue Radio.world. Join your hosts, Violeta Strash with John L. Scott Kent North and Tina Lombard with Guaranteed Rate Affinity. They'll help you navigate the waters of our volatile real estate market and offer you some guidance on how to make your hard-earned money work to make your dreams come true. Learn about current trends, get tips on financial matters, and have fun, interactive discussions about your home inside and out. That's Real Estate and Money.
Okay. All right. So let me get back to this beast. So what I'm trying to say is, and thank you for that little song and dance there. The thing is, it's like if you broke your leg and you need to go to get your leg fixed because your leg is broken. You're not going to call 3 hospitals and say, how much to fix my leg? It's impossible. You have to go in there and they have to take an x-ray. They got to find out what's wrong with you. They got to find out your medical condition. If you've got certain medicines you cannot take, is it splint? Is it broke? Is it fractured? And then they can say, hey, boom, this is what your insurance is. Same thing with buying a house. You can Google what mortgage rates are and they'll tell you 2.9, 3.1. You can Google that on the internet. But you want to go to a loan officer that's actually going to close that loan. And basically the rates are around the same. But if your loan officer does not get you to close, you're going to lose maybe $20,000 in earnest money. You may not close on time. They may have some advance fees that they're going to keep throwing at you because you're not making those closing dates, or you may not get approved at all. So the rate right now is a conversation pre-2008. Right now, most of the rates are the same. It's very transparent. You can Google and find out what 30-year rates are or 5-year rates are. But you really need a doctor on this side of the application to say what's best for you and talk about that. So I have people call me all the time and they want to do an $800,000 loan. And I say, do you want a jumbo loan or do you want a conforming loan with a HELOC? They don't know what I'm talking about. But me, as my licensed professional, what I'm supposed to do, I need to tell them this is what's best in your goals, your financial goals, and what is best for your portfolio, granted everything you have. So you can never, when somebody says, I'm just looking for rates, it's like, I understand that, but you can Google rates. You need to find out what you need for medicine. And I can tell you exactly what the best medicine is for. And once I do that, I give you a prescription. I give you a pre-approval letter and say, pre-approved for this dollar amount. And we already talked about, you're going to put $400,000 down. It's going to be a conventional loan. The payments are going to be blah, blah, blah. And we give that to your realtor and you go find a house within that dollar range. And it's very easy now, and V can attest to this. It's very easy to get approval, especially when you have golden credit and you've got a golden parachute of retirement and everything else. It's very easy. The key is making that listing agent and that seller, making them feel that you have the best application and the best offer. So once I got you approved, let's say I got you approved for
But me, okay, here I put the buyer hat back on. Okay, it's Friday, and I'm telling you kind of late because we just got back from looking at that house, and they're saying that they need all the offers in by Monday. How quickly can you let me know as soon as I fill out the application, which will take, I don't know how long, how long after that when I return it to you, how long will it take for you to?
Okay. Thank you for asking. I'm so glad you brought that up because I had a lady 2 weeks ago from Seattle that she called me up on Friday night and wanted to make an offer on a $1.3 million house in another state. And the offers need to be in by 11 o'clock Central Standard Time the next day. You know, I pulled 3 people in and we got that approval. That is not the way to go. You cannot call your loan officer up on a Friday night or a Sunday night and expect them to push out something for you. You need to have that approval letter days before you go in. Because if you do, you're doing yourself a disservice. And if you do get that offer, there's so many different questions. The loan officer, basically, you did not give them a chance to really do anything. You know, so the thing is, if you are looking for a house, you get that pre-approval right now. Don't just say, I got good credit. I got $800,000 down. You know, look at me at an approval.
Yeah.
Do that. Because even if I say that, yeah, you're pre-approved, I don't have the paperwork in place. I don't legally have your W-2s or pay stubs, or I really am just shooting from the hip. And I'm not going to put my 20 years worth of experience and license on the line because you decided to call me the last hour, right? So most clients, like V, when she sends her clients over, I mean, I take a look at them weeks in advance, and you want to have that solidified. You want to have your approval done so that at 7 o'clock at night on a Friday or 10 o'clock on a Saturday, you have the approval letter. So I get a lot of, I have a lot of buyers who call me and they'll say, well, I'm making an offer at 1.3 and the letter you gave me was at 1.4. Can you bring it down to 1.3 so the seller doesn't know I have that extra $100,000? I certainly can do that, but that is not necessary. It's not necessary. If your lender gives you an approval letter for 1.5 million and you're making an offer of 1.2 million, why not go in there looking like I'm stronger than all of these folks here because, I got a $1.5 million approval letter and the house is only worth $1 million. So you need to give it to me because I'm qualified. There's nothing wrong with that. Okay. Sometimes as a strategy, sometimes buyer's agents say, well, I don't want them to know that they're approved for $500,000 more because they'll nickel and dime us. That's a strategy. But in this market right now, you need to big ball. Okay. You need to go in there and you just say, hey, listen, all these other chumps ain't got anything. I got the money. I am pre-approved. So you want to go in there big ball. You cannot be cheap on this side this moment because right now the sellers can choose from 20 different offers. You can't be the ball because when it comes down to a negotiating this, you've already told the sellers I'm cheap and there's no way I'm going to do a dime over whatever. They're not going to pick you. But if you're in there going, oh yeah, cash is what I dress in. That's the kind of feel you want to give, whether it's true or not. But you want to show that you're wealthier, that you've got the capacity. Because they want to choose you based on you can close in 21 days. And a lot of banks can do that. I can do that. And if you are going to in any way not fulfill that contract and you're going to start playing games with them or they're going to have to nickel and dime $100 here or $1,000 there, they don't want you. So you want to come in with your application very, very strong. I'm approved for 1.5 million. Your house is 1.1. Take my offer. I've been approved for 2 weeks now. So a lot of times there's nothing wrong with that approval letter being 2 weeks old because they know that you've been shopping, that you are good for it. If they see, today's the 24th, and if they see an approval letter for the 24th, they don't think that you just got verified. So just make sure there's all these different tactics that you can do. But you want to make sure that you are fully approved before. Yes. Don't go in there and tell your realtor, oh yeah, I'm great. And then your letter goes, you claimed bankruptcy like 2 weeks ago. Oh my God, I got that offer. I put $5,000 earnest money down. So don't do that. Make sure that you've got that done weeks before you go out. You've got to have a pre-approval right now. This is not the market to play games.
Well, how long is that letter good for?
180 days. Just don't go out and quit your job and go buy a horse and a hotel and an airplane, which some people do.
Yeah. New car, new Tesla. Yeah.
Yeah, and they start moving money around and stuff like that, start buying other properties, and they start co-signing everybody else's loans. When you get a pre-approval, just stay right there. Don't go get new credit. Don't start paying credit off. Don't start accepting all these gifts because your dad wanted to give you $150,000 and you move the money into your account. Don't do any of that funny stuff until you talk to your loan officer because that may scales against you, or it may trigger a letter or some type of condition that will foul up your loan. So, so talk to a loan officer. Once you talk to your realtor and you find out you do want to buy, you want to sell, then the next step is to go to your loan officer and get a bona fide approval letter, turn in your pay stubs, your W-2s, everything. Get that thing solid. And then when you come in a house, your loan officer will call the listing agent up and say, listen, beyond a shadow of a doubt, these people are good to go. You need to give them this loan. They will close. I have everything. That's what the seller wants to hear. So that's what you need to do. Mm-hmm.
Okay, so I really want to win the deal. I want to get into this $800,000 home. What do you think, as my loan officer, what do you think I need to do? Like down payment, and how much earnest money should I put down to win it?
Well, the thing is, right now people are putting $400,000 or $500,000 down. I mean, don't go in there and say, I'm going to give them 500. I'm going to give them 5%, 3%. If that's all you have, then of course do that. But if you have more money than that and you really want that house, grab it. Okay. So if you're going to, you know what I'm saying, you can put 3% down is the smallest amount, 3.5% down, but it shows a weaker variance. If somebody comes in, they're putting down $200,000 and you're putting down 18. If you own the house, who would you go with? So you want to think of those terms. Of course, if that's all you have, then of course do that. But if you have more money, now is not the time to skimp. Because what happens is the price of your house went from $900,000 last year to $1.2 million. So to save $20,000, you lost $500,000. That doesn't make any sense. Is that understandable? So you say, I don't want to pay $5,000 more, and I don't want to beat that other person. Well, then the house just went up $45,000 in the next 6 months. So you guess what? You just lost $40,000. So you didn't want to give up an extra $5,000. Now is not the time to skip. If you have money, you need a big ball. Put that money down and get that investment, because somebody else is going to get that, not you. Don't lose a file over $1,000 or $5,000 or $10,000 if you have $800,000 sitting in your account, because next year that house is going to be worth 10, 15, 20% more, and you're going to wish that you gave up that money. If that makes sense.
Yeah, and we can't foresee the future. We can't say that it's going to be up. You know, that much it could turn around and tank, but right now the market is good. Whether you're buyers, you know, you've got so much more house that you can buy because the interest rates are so low. Now's a good time to buy.
Right. Yeah. I tell people, I mean, if you're in a market where there's 20 people on that property, and the property is going for, let's say, $800,000, why are you going in there with $805? You're not going to get it. You're wasting people's time. You're not. So I tell people, if you're qualified for $900,000, then go in at $750,000 and beat everybody in that price range. But you can't say, oh, you're approved for $900,000 and go in there with $900,000. Oh, can we push it to $905? You're wasting everybody's time. It's not going to happen, because somebody in there that's qualified for $1.5 million is putting in an offer for $1.1. You know, so use your strategy right now. If you know you don't want to delay and what have you, then go in below your target market. And of course, the appraisal is going to come back, and you know you can leave it or take it if the appraisal comes back a lot lower, and you're like, you know, maybe I don't want to do that. But if the appraisal comes back and it's higher, you're going to be happy that you did. Yeah. So strategies. It's not a buyer's market right now. It's still a seller's market. You know, if the price is at $750,000, do not go in there with $760,000 in Seattle. You'll be laughed. It's just you're wasting everybody's time. But if you are approved for $750,000, go in on a $500,000 home or $600,000 home and escalate that bad boy up. You know, so you're in your range, but you are a lot higher than the other offers that are coming in. If that makes sense.
Oh yeah, definitely. Well, do you like the escalation clauses that are out there available?
I think they're smart. I think they're very, very smart. I think escalations are almost a must, and I think they're very, very smart. And you can use them if you've got that ability and you're putting a lot of cash down. A lot of second and third time home buyers have that ability right now. I say use it. Absolutely. You know, it's a great strategy right now. And I would, if you have the cash, that's how the ones I've known, that's how they won their contract, is because of that escalation clause. And they did have the cash to put their money where their mouth was. So if a house came in at like they bought a house at 1.25 million and the appraisal came in at 1.1 million, they're like, whatever, we're putting $500,000 down anyways.
Yeah, who cares?
This agent's like, well, great. If the appraisal comes in lower than the price, the people are putting down that much money anyways. They don't care. So that will make your offer a lot stronger. So absolutely, that's a great thing to do.
Yeah.
Yeah. So, but like I said, if you get your application together, as fit as a fiddle, and I get some clients who are like, well, I don't want to give you my tax returns. I don't want to give you my W-2. I just want you to quote me a rate. Out of respect to the realtor, I won't hang up on them, but I really want to hang up on them because once you give them an approval letter, they'll never give you the stuff. And then 3 days before closing, you don't have documents in there telling you, oh, I'm losing my $20,000 earnest money. It's like, you never give me a pay stub, So you cannot do that for the realtor's sanity, for the buyer's sanity, the seller's sanity. Get your stuff up front, get that pre-approval letter locked down, and get up there and be the biggest threat on the block and get yourself that house and close it in 21 days.
There you go. Well, so what the strategy is, call me at this number that you see on the screen. We'll work it out. We'll find you your dream home, and then I'll turn you over to Tina, who will tell you, actually, you need to find Tina first and get a pre-approval letter, because then I can take you out to those homes that match what you're approved for.
Exactly. And I want to encourage those second and third time home buyers, if you're in your second or third home, call me up and see if it's worth selling.
Yeah.
You'd be surprised. You might have $1,000 for equity in there. But anyways, I think we got 30 seconds.
Yeah. We're your team. Thank you so much for listening to us today. And join in the conversation next week at 2:30 on Tuesday. What else you got?
That's it, you guys. Thank you. Have a great week.
Thank you. Bye-bye.
Bye.
You've been listening to Real Estate and Money with your hosts, Violeta, Strash, and Tina Lombard. For more information, call 206-717-4490. That's 206-717-4490. Go to the Rainier Avenue Radio.world website to find the Real Estate and Money schedule, or tune in to our live show every Tuesday afternoon from 2:30 to 3. We will help you find your dream home.